One. Good morning. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is December 11th, 2015. It is 9:02 a.m. Eastern Time. For those of you that are here for the first time, welcome. And for those of you that are back, welcome back. Let's go to the disclaimer before we begin. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation or an offer to buy or sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, let us take a look at the calendar. The ginger was great. Thank you very much for asking. Okay, so we are on Friday. And what do we have today? Okay, so we just had some news, some numbers that came out. Core retail sales came out better than expected. PPI numbers, producer price index numbers came out better than expected. Retail sales came in as forecasted. Core producer price index for the month came in better than expected. We're expecting consumer sentiment numbers within the hour, business inventories, and inflation expectations. Could be a good Friday. Who knows? Just might find a really decent trade. No, the ginger really did it. Thank you. Thank you. Let us go to the charts. Let's begin. Let's take a look at the futures first and see what we have. Well, it doesn't look pretty. This is the 15-minute, and the Dow has collapsed from 17,620 to 17,400 on the future side. So that's a big drop. That's 220 points and falling. Not a pretty day for them. Let's take a look at bonds. Oh, gotta love coffee this morning. Okay, well, bonds seem to be on the rise and not apologizing for it, regardless of whether right now I would expect bonds to actually be on the decline only because Yellen is going to be coming out next week for the Fed announcing a rate announcement, but I may be wrong. Let's take a look at the DAX, see where that's at. See how the European markets are. Worse than expected. Hell, it didn't even hold. It just collapsed from the open. Went from 10,600 to 10,400. I should have stayed awake. Let's take a look at the S&P as we work our way down. You know that all this is oil driven. Give it a minute. We'll see what the S&P is doing right now. The interesting part is that, and I haven't looked at Forex yet, but we're going to get to it very soon. So I imagine that a lot of these pairs were really mobilized last night. Okay. I'll explain why oil is driving the markets down. All right, S&P went from, well, it just collapsed. Let's just say that it isn't pretty. And the NASDAQ is even worse. We'll give that one a moment to load. There's too many major corporations invested in oil. And with the value of oil going down, so is the value of their stock. No, it's not a tax break. This is above and beyond a tax break. What's happening is that now it's about market share. Okay. Yeah, the NASDAQ came down like a stone. Let's take a look at crude. Then we'll get into the explanation as why crude is leading the pack right now and why these markets will continue to fall. Okay. Yeah, see, crude came down. I called it when it went to 39 that it was going to fall, and it's fallen so far $3. And this was only a few days ago. And believe me when I tell you, it is not going to get any nicer. Yeah, I called it here. I said it was going to go to 38.50 and then come down. That's exactly what it did. And it hasn't looked back since. Now, here we have a power down on the 15-minute. So that tells us that this trade is really not is short-lived to the upside. Now, if we mark it, then we'll be able to come back to it. Let's go to the 5-minute. What's happening is that the Saudis are flooding. They're flooding the market with oil. And by doing so, basically have caused a surplus, which is affecting other economies, such as Venezuela, such as Russia. It's also a power play against ISIS, because ISIS is funding itself through the sale of oil in the black market. So they're going to dump the value, and it's probably going to go to about, rumor has it, $25. Once it hits 25, 23, then it'll level off. But there's no guarantee that it will go. So I don't know if I like this trade. Actually, I do like this trade to the downside, but it's a little too aggressive. We're a little too late in this. I wouldn't take it right now. The reason why oil is driving the markets down is because U.S. companies cannot survive on anything less than $50 a barrel. So it's becoming extremely difficult for them to sustain themselves. And a lot of them are defaulting on their loans and about to go bankrupt. There was a hedge fund manager, and I was reading this yesterday on CNBC. Let me take you to it. This article is actually very interesting because I found it, energy. He said something that would be Where is he? Where is he? His name is Arnold. Here it is. Half of U.S. energy industry may go under. And his explanation is actually a very good explanation of the fact that they can't sustain the industry with oil being so low. If oil does not rebound, then we're looking at half of the industry going under, and that is no joke. We're talking some serious bankruptcies. Now, if that were to happen, which more than likely it will, then you're going to see a tremendous amount of unemployment come into play. So that's a very, very serious matter at this point. Now, the problem is that they can't stop the inevitable. It's too late. It's like the real estate bubble. The real estate bubble destroyed, in an industry completely, and many more. Oil is an industry, and it's basically imploding within itself. So all we can do is look to profit from it. At the end of the day, that's really all that we can do. Hedge against the downward spiral, which in this case is a tornado that you do not want to be in the middle of. But that's what's going to happen. So while oil is driving the markets down, it can only get worse. Yes, if the Fed raises interest rates, things can only get worse. But it is the only countermeasure that they have so that when this economy goes into a recession, they can drop interest rates. That's why they're going to do it. It's a countermeasure that they're preparing for. They know it's inevitable. They can't stop it. The tidal wave already hit. Now we're just pretty much going over basics in that regard. And I was right. The yen did drop. Well, the yen got stronger against the dollar. So yeah, we're gonna see a tremendous amount of. I want you to look at this because this is very important. These levels that I drew here. Okay, this is a 600. This is a 720 minute. Now these are, at one point these were support levels. Okay, but this is on the 720 minute. These are on the higher time frames. When it opened, and this is why I tell you that that at the close of the U.S. session and open of the new day, there are trade opportunities that you don't want to miss. This thing went long, and it went long from 121. Let's see, 121.53 all the way up to 122.21, and then it dumped from 122.21 all the way to 121.21. So it came down 100 pips. Went up 80, came down 100. Now, if you would have known that this was a resistance level, you would not be trading against this. You would be taking this trade to the short. Now, let's look at it. Let's go to a 30-minute, because between a 30 and a 45-minute and even a 60-minute, you're going to find power dots around those levels. And that's why I tell those of you that have the software, map out the levels. Map out the levels, because this is what's going to make the difference. So here, there weren't any, but there should have been. And see how it's continuing. Now it's, it looks like it's going to break this level. It may not. This, it may hold here, but I doubt it. I think it's going to go right through it. Let's go to the 45. So these levels in the higher time frames that we've plotted are where power dots have formed in the higher time frames. making them true support and resistance levels. So as you can see, it doesn't get any more clearer than this. The minute they broke, they came back, retested, and then came down. They did it again here. This was a clear trade yesterday. And then, of course, they came back up. So they've been really using this level, but I think that they're going to break this level today. 121.17 ain't going to hold. And it's, you could say that's because they're taking profit. That is the reason why that they're dumping the market right now. But no, they just can't hold it. It's become something impossible on their end. So let's get to a 20-minute real quickly. I want to see something. Maybe it's on the 20-minute. Oh no, it looks better on the 20-minute as it falls. So this is telling us that the numbers that are going to come out right now at within the next 40 minutes are going to be really bad. Not much that we can do on this trade because we've already missed it. But look at this. It went from 21.51 to 21 even to 121 even. Let's take a look at the Swissy. Now I myself have not mapped out all the pairs. I've been a little busy myself, but I do plan on doing it this weekend. Forgive me. And it's very important because it allows you to see the real power play, the real trade. Because these are levels that the bank's algorithms are already programmed to basically respect. They're not going to break them. They're going to bounce off of them, if anything. See, look at this one, the US Swissy. This is on the 20-minute. So today at 2 a.m. my time, which is 5 a.m. Eastern, this thing gave the signal that they were not going to break above 98.90. And it dumped. And look at where it's stopped at. Exactly where these power dots had formed at 98.45. So this trade could have easily been predicted, especially because they had already initiated to come down. So when this formed, it was a giveaway. And more than likely, it looks like they're going to break right through this level. And if they do, the next level they have to hit is right here, 98.32. So that means they went from 98.90 to 98.32. That's a very serious power play that they're doing. So a weakening dollar right now is pretty much a good excuse for the Fed to increase rates next week. I expect, rumor has it that she might have the nerve to actually raise rates half a point. Rumor, some people say 3/4 of a point. I don't think so. But half a point, maybe. For sure a quarter. That's what I'd say. But if she goes with a half, that'll really suck it to everyone. I'm preparing for the worst. I never expect the best. With her, you can't really say. She's not that aggressive. She's extremely conservative. And sometimes you just gotta let the chips fall where they may. So in this case, we had a signal here at 2 a.m. Pacific time, 5 a.m. Eastern time. Perfect signal on the 20-minute, right off of this level. 151.34, boom, all the way to 152.16, and it'll hit the 100 pips before the day is over to the upside because it's already broke this level, which was a resistance level on the 720-minute. So the agenda is very strong right now to weaken the dollar. Now, that doesn't make sense why the stock markets are falling. Normally they go in in correlation with one another, but in this case, it's really oil that's killing everything right now. So if you understand the reasoning behind this, then you can map out the trades, and you're not going to fear the direction because you're going to understand why it's happening. Let's take a look at the Euro USD. Okay, another one bites the dust. Now this one bounced from 109.26 to 109.88, and more than likely will make a move to 110. This would be the next target. It's a little late to jump in the trade right now. I'm not going to say we missed it. We missed it early on. This thing kicked in at 540, which was 8:40 in the morning. So we're a little late. Can't really expect much in that regard. Let's take a look at the Australian. The Australian dollar has been a very interesting one. Now, I'm not a big fan about trading the US session that much, and I'll tell you why. There haven't really been that great opportunities for Forex in the morning. It's been more so in the futures market, so we have to admit what it is. But the European and the Asian markets are the ones that have set it off. See, like here, for instance, you got the Australian dollar that has collapsed against the dollar. So it's trading at 72 right now, which is very, very bad. This thing kicked in at around, this was 10 p.m. my time, which was approximately midnight Eastern time. Let's take a look at the euro. That means if this came down, the euro Aussie went long, and it had to have exploded to the upside, and it did so during the Asian session. Give it a minute. Oh yeah, see? Beautiful trade out the gate. 150.24, and it's at 152.59. That's about 230 pips. So yeah, this is definitely a pair that you want to look at. Make no mistake. It is a mover, it's a shaker, and when it moves, it rips. Let's take a look at the New Zealand. Actually, I want to look at the CAD, the US CAD, because this must really be devastating, this currency pair. And believe me when I tell you that I don't see the CAD getting any stronger, especially when they're oil dependent more than we are as a producer. Oh my God. All right, let's change that to a 15 minutes. Give it a second. Actually, let's give it a minute. It's going to take a minute right now. No, that's a New Zealand yen. What in the... I wanted the US CAD. My mistake. Okay, this should hit. Yep, US CAD. So yeah, that's why I said I didn't think that the CAD was going to actually get stronger. It actually got weaker more and more. And again, this trade happened right now. We've missed it. Now, if we look at it for what it is, and this is basically um, taking a look at the algorithms and analyzing why you would have gone long instead of short. Let me add one more indicator, which in this case would be the volume indicator, so you can see how clear this trade was and continues to be. In actuality, from the looks of it, this thing could really run. So let us add the volume indicator, and then we'll take a look at the Y. The Y factor is always important because it allows you to understand the manipulation of order flow and the deceit behind the decision process that the algorithms are creating, which the retail trader cannot sometimes comprehend or grasp. We can comprehend, sometimes we just can't grasp the why. Why is this happening? So here we explain why, so that when we trade, we understand why. We have to take accountability for our own mistakes. And in this case, it's more about taking accountability for their mistakes because they made a big mistake. They never thought that anyone would be able to counter program their program. All right, so let's take a look at this. This is where it's going to get really, really interesting. Now, see right here how this candle formed, right? And you see how the point of control, let's go over the indicators before anything. We do have some new people here. So this indicator, these are what we call power dots, these gold dots. And what they do is that they announce three things. They announce volume, momentum, and liquidity buildup. What does that equal? A trade. And so when they form, you better pay attention because if you don't, you're going to miss out. Bottom line is that normally you're going to get between 30 minutes to an hour before the trade actually ticks in. Now, this algorithm that we've designed has now evolved because now we've designed this one which allows us to see the footprint inside the candle. So these dashes that you see represent where the buyers prefer to buy and where the sellers prefer to sell at. So what we look for when the power dots form, we look to the left to see, okay, did they announce that the buyers were going to come in to take control? In this case, the answer is yes. It did announce. No, I don't think there's interference with the mic, but thank you for mentioning that. So what's happening here is, as soon as this formed, we look at three components in this candle, and this is where I hope to not lose some of you because it is by far one of the most complex explanations, but one of the most simple definitions of the trade. Now, see this candle here, it shows us the buying and the selling volume and the net, the cumulative. So this candle had a total of 338 million on the buy, 398 million on the sell, a difference of 60 million. Now, logic tells you and tells us that an excessive amount of negative volume means that the sellers are in control. Not here. Here it's different. What I'm asking you is to think outside the box here, and I'll explain why. What this is announcing, when they establish a support level, because that's what the power dots establish, is a support level that they've used in the past to rebalance their positions. Why? Because they know that this is a price of battle, if you want to call it that. Now, it's a very interesting, way of saying that, but it's true. Why is this? Oh, they look like they're going to come down, but we'll look at that in a minute. The reason I say this is because that excess amount of volume, 60 million, is actually a representation of the limit orders that the sellers are proposing below 136.42, where these power dots have formed. But the buyers aren't buying. Why? Because the buyers want to buy up here, above 136.50, which is about 136.55. Now, why is that so? Because they're announcing it. We can actually see the footprint of the trade in each candle now. We can see where they prefer to buy and sell. That's something that you couldn't see before. Now, that's a very bold statement, but the algorithm doesn't lie. Here, for instance, in this candle, you can see how the volume wasn't as high on the buy, but extremely high on the sell. Look at this, 175 million on the buy, 224 million on the sell, a difference of 49 million on the negative. Now, those were orders that did not get filled, but it shows, it completes the story here that as they're getting closer, they need to rebalance. Why? Because they know that the buyers are going to come in and take control. Here, for instance, you have in this candle 151 on the sell, on the buy, 149 on the sell. Not a big difference, almost practically balanced. But what does the story tell you? Well, the story tells you here, when this formed, that the buyers are not content or happy with the sellers taking this down, and that eventually they're going to come in and take control. Now, this candle announces it, but the second candle confirms it. Why? Because in this case, we're seeing an imbalance of the worst kind. We're seeing that the sellers are no longer interested in selling below where the buyers want to buy. So this is inverted. That's one clue. Number two is that this is that the point of control for the buyers, which that's what this dash represents, is in the middle. And so it's telling you that it's going to slow down. Now, usually when that happens, that means that the next candle is the last candle to hold this. So when this happens, then what occurs here is that they throw the kitchen sink at it, but they do so to get out of their positions because they know that the buyers are going to come in and rip them limb from limb. And that's where you have candle number two, which comes in with 347 million on the buy. When on the sell, they're at 236 million. You have a difference of 111 million. Now, the reason they do this is to demonstrate, to show their strength, to show their decision that they are going to take this up, and they're not going to let it fall any further. Now, this thing is going to continue to go long, so, as an example, let's buy it, because it's not going to stay where it's at. So I want you to look, I want you to analyze this, which is a complicated theory to accept, but one that must be understood. Because if you don't understand what's happening, then you're not going to be able to interpret what the real trade is and where the real trade is forming. So here in this next candle, you can see the volume. The volume increases to the upside, 450 on the buy, 448 on the sell. Now, even though the point of control for the sellers is here, the point of control for the buyers is still up here. And this is a bearish candle with bullish volume. Why is that? Because it opened here, came down, and then pulled back up. And the buyers came in to take control. Why? Because this support level has been established. This is the price level that they have established to basically run up. Now, being that said, and then normally you're going to have about 5, 6 candles that make that move to the upside, normally. So here's where interpretation comes in, and it could be, you know, as simple as or as complicated as it can, as you make it. Now we understand what's happening here, but now I'm going to show you how to define volume divergence, which is something that normally evades you. Why? Because it evades everyone else, because they don't understand it. So here, for instance, the volume indicator here at the bottom is going to show you what the volume is actually doing. Now, when they came down this bar, they literally threw the kitchen sink at it with the volume, correct? So when this occurred, you know, they threw 398 million on the sell, 338 million on the buy. So they had 60 million. That's what this dash represents, the excess amount of volume where it settles. So this is the 50% line right here. So if the dash settles above, it makes it a positive. If it settles below, it makes it a negative. But it also shows you the divergence in it. So what's happening here? Here in this bar, they threw the kitchen sink at it, 347 on the buy. The sellers sold less, 236 on the sell. You had a difference of 111 million of positive volume divergence. No other indicator out there is built in to show you this. So here, you're seeing one, that they've established a support level. You're seeing two, that the buyers are giving notice in advance. In this case, it's a 20-minute candle. So they're giving practically an hour notice that they're going to come in and take control. When this happened, all you have to do is just look back. 2, 3 candles max. The decision's already been made. You cannot go against what's already been decided. So when you see this happening, the minute that this candle formed and the minute that you saw that the point of control here was announcing that it was over, and you could see the excess amount of volume that was not going to get filled, that itself was a clue. When it came down all the way as aggressive, because this is an outside bar. When it's purple, it's an outside bar. When it's gray, it's an inside bar. This is just a regular one, and this is a regular one, and this is a regular one, regular bullish and regular bearish. So this is an outside bar. So this traded outside the previous candles aggressively. It came down like a stone. They established a support level. They notified us that the buyers were coming in to take control. You had excess amount of volume on the downside, which did not get filled. They threw the kitchen sink at it, failed miserably, and so then what's next? The buyers come in and they take control, and they don't apologize for it. And they rip anyone that's in there limb from limb. And they don't apologize for it. So they took it long, and of course now, you know, after this being the third candle, normally I look for entries on the third and fourth candle, which are more conservative entries. But if I understand what's happening here, and this is already formed, the minute this thing opens, I'm in it. I'm not even questioning it anymore. Now, that's just me trading more aggressively than most of you because I understand what they're doing now. My job is to help you understand what they're doing. So even though, and see, this is why every time that they do this play of like, I'm going short, I'm going long, I'm going short, I'm going long, I'm going short, I'm going long, what gives them away, or at least what we have been able to define for you, is the volume. And as the volume increases or decreases, you're also going to see here the divergence in that volume. Why? Because price action is driving it up at the same time. Now, does the candle reflect the real volume inside of it? The answer is no, it does not. And so now we can say that candlesticks have been counter-programmed. Why? Because they don't reflect the real truth. They don't reflect the real information that defines them. So yes, I'm asking you to think outside the box. I'm asking you to develop an institutional mindset and to stop thinking as a retail trader because you've been looking at the wrong information. You have been deceived, and that's why you've lost. And you're here because you want to learn the reason why you've lost and how you can become better to win. We're here to win. We are not here to lose. We are here to win. That's what this is all about. But in order to win, we have to understand why. If you cannot explain why, then you don't have a reason to trade. So here we can explain why this happened. We can see volume divergence. We can understand how they've manipulated their order flow. Now, this candle, as it was going long, announced short. Normally, you get a 2-candle warning. 1, 2. However, this candle didn't announce where the point of control was for the sellers. So that means that they had really no interest in this game. If I would have seen the dash form here at the bottom or right below this or here, then I'd say this is still a bearish trade. Now this is on the 20-minute, granted. The same principle applies in the smaller minutes. Let's go down to a 10-minute. And you'll see why. Give it a second. Actually, give it a minute because we have the volume indicator and that thing takes a tremendous amount of memory. Okay, so the plot thickens, as they would say. So what do you see here? This is on the 10-minute. Look at how much time they told you that this trade was going to go long. This thing started here at around 4:20, which is 7:20 a.m. Eastern Time. At 7 a.m., they told you that when they came down, they were going to go long. Now, when they came down here, this was it. Again, what happened here? It showed an imbalance. They announced it. There was no question. Now, here's where it gets tricky. You see this pivot point right here? This is a price that it has to break, 136.80. If it breaks 136.80, it's going to fly. And nothing's going to hold it back. And it's just about to break. Now, same concept applies here. We're not, what we're preaching is what people don't want to hear, but is what necessary. What is necessary to win? Because if you can understand this and wrap your head around this concept, You will not make mistakes in taking trades that you shouldn't, but you will take trades that only make sense. This is a trade that has every element that makes it a high probability trade in your favor. Why? Here is why. You have an established support level, which their algorithms have defined. You have their footprint announcing that the buyers are going to come in to take control, which they did, because when they came, see how they're coming down short here? As they began to go short, what did they do? They started to announce that the buyers were not happy. So their point of control was at the very top of the candles. And hell, even here when they were buying it, the buyers were at the top, not at the bottom. So the sellers knew this. And so even as this was coming down, same thing. This is a bearish candle, but the point of control is at the very top. So what is this telling you? This is telling you, I'm not going to go short much longer. As this one came down in the middle, so as soon as this thing hit the floor here, that was it. This was the one that called it. And this was at 5:30, which is 8:30 in the morning. So they hit this strong and heavy. 95 million on the buy, 150 on the sell, in terms of 19 million. 19 million, and you're going to tell me that you're not going to break below 136.48. That makes no sense. There is no sense in that trade. So what did they do here? The buyers came in and they threw the kitchen sink at them, but failed because the sellers came in and tried to take control again. But what happened this time? You had an excess amount of volume in 41 million negative that didn't get filled because those are the limit orders. You can now see the limit orders that these guys are pushing through around these support and resistance levels. So here you can see that this support level or this price level is now a threshold that will not be broken because they have come to terms. Now, this candle kicks in, of course. The volume is a little higher, 159 on the buy, 131 on the sell. And even though this is announcing that it will come back short, it did not announce anything different. Why? Because the point of control for the sellers is down here. What happened here? 187 on the buy, 106 on the sell, difference of 82 million. And again, 82 million that the sellers didn't offset because they didn't want to. Oh boy. So of course they came back, but look how they're using the trend dots. They're using them as support levels, and the trade goes on and on and on and on and on. And I don't have to prove more on this trade. Why? Because we got in at 136.73, and it's trading at 137.06, 137.07, 137.10. Now, this is what the smart money is doing. We're just basically capturing their information and sucking it to them. And we're not apologizing for their own stupidity because they're giving us the reason to take their money. Bottom line is that that's what this is all about. This is about money. Nothing more and nothing less. We are playing a game of chess, a digital game of chess, where they are trying to outmaneuver you 5-10 steps ahead, where we are giving you X-ray glasses to see their move and their poker face. So at the end, we're giving you all 4 components of volume. We're showing you volume price analysis. We're showing you volume spread analysis. We are showing you volume divergence, and this is going to get nasty because there is no roof on this one. Let's go to the higher time frame. Let's go to 120 minute. And we are showing you the footprint of order flow. What you're seeing is the truth behind the trade. Now, normally, most of you would not have taken this trade because you would not have understood the reasoning behind it. Now that you understand the reasoning behind it, setting aside that granted oil is a major factor, which is kicking everyone right in the gut right now. No question about it. But if you understand that, then you're going to look to see how the trade sets up. And if you know that the Canadian is commodity based on oil, then that's all that matters. At the end of the day, that's all that matters. Let's give it a second. Okay, so where's the roof here? I'm the daddy. Show me the money. Seriously? I'm going to need more data? No way. I guess I am. Let's go to 100 days. And don't worry, this is going to continue to go long, so we're not missing much. So give me a minute. I'll be right back. See, it's taking a little longer than expected. It'll come up. Give it a minute. Oh God, give it a minute. And we haven't even seen the numbers that are going to come out within the next 5 minutes. It's going to come out soon. Give it a minute. Give it a minute. Oh, what about movies? You know, there's a saying, the truth will set you free. God wasn't wrong about that. It can either liberate you or it can confuse the living daylights out of you and trap you. One or the other. Because you can either be stubborn about it or you can accept it for what it is and move on. Okay, so let's see this. Almost. I mean, they really pushed this thing. Let's see. No, this is it. It's gone to levels of real. Let's go. Give it a second. Let's push this up to the side. Okay. Let me remove the volume indicator now because I want to move fast. I can't move fast if that thing is there. Do we have a question? Yes, thank you for mentioning that. So the last time that it hit there, it was in 2004, huh? Wow. Let's just say the Canadians are not going to be happy with the depreciation of their money. Especially if you're Canadian and then you want to buy my software, boy, you better buy it now before you lose any more value, because otherwise it's going to get even more expensive. I don't give discounts. especially currency conversion. So this is the moment. All right, let's take a look at this. Uh-huh. All right, we're gonna have to continue to go higher and higher. Might as well go to the 720 minute. Sorry, Paul. But see, more reason why you have to buy now, buddy. Now is the time. Now is the moment. I want to make this a happy new year for all of you guys. But there can be no change without action. At the end of the day, you must take action. So take action now. I promise that in less than 3 weeks, I will have you ready to trade. That you're going to say, why didn't I find this guy before? Okay, what in the world? All right, so let's see. Oh, yeah, this is at levels that, oh my God. I mean, this is 720 for crying out loud. Let's go to the 1440. Oh, very nice. Oh, God, I'm going to have to remove the price identifier. Oh, give it a minute. We're almost there, guys. We're almost there. It's the platform. I'm telling you, it's not my computer. Whoa. Okay, we're going to have to go higher. So we're going to have to remove the price identifier and go higher and higher and higher and higher. Let's go to the monthly. Oh my. Oh my goodness. Let's see. Oh, come on. Let's see here. Okay, so we're right here, and this was hit back in 2004 of May. Now, it looks like they're going to try and make a move to 140.32. Now that means that there's another 130 pips on this thing to the upside before it stops. But I'm thinking that right now it'll probably hit 138.23 max, and that's it. Now that's still from where we are, 100 and some pips away. So very, 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 very interesting. Let's go to the weekly. See how it reflects here. Come on, come on, come on. Stop that. Behave yourself. No, can't even see it on the weekly. This is all based on the monthly. Ouch. Talk about hurting someone and not being kind at all. So yeah, no, this is right here, 136.80. I'm thinking 137.36 is where it probably will stop, but then 138.08. So 137.36 should be your target. That means they got another 33 pips to go before they stop. Now, the news came out and the numbers came out, and I'm sure that they weren't that great. Let's take a peek. So here we go. Consumer sentiment came in less than expected. No. Business inventories came in as expected. Well, actually less than expected, really no change. Inflation expectations came in at par because they really didn't have a number. They didn't know what to expect. And then we have the Bank of England member Wheel speaking within the next 30 minutes. What he has to say, I have no idea. It's not going to make a difference. So now that we know where we're at, now we can go to the smaller minutes, and now we can say it's time to exit the trade. Now, here's where we go back to our other indicators, because the volume indicator and the volume and the price identifier will not work higher than the daily, and that's on the minutes. So it's because of the tick data. So they came all the way 137.08, and of course they pulled down. Now here we didn't have. Now I'm still not short on this. I'll tell you why. Because see here, they announced each time higher and higher, and the sellers conceded to sell at a higher price. Here was a pullback, and I'm assuming that this pullback is really not real. And you see this candle right here? Let me get the pointer. See this one right here? What does this tell you? That this is an imbalance of the worst kind, because the sellers are here and the buyers are here. That doesn't make sense. The sellers are still agreeing to sell at a higher price. Now here, the sell point of control is at the bottom, and the buyers are here. But this is not normal. Again, this is an abnormality. And they're using the trend dots to go long. They're using them as support levels. So, as much as, and you see the volume here on this candle, this one right here, see how it came down, it spiked, and look at where's the volume divergence? Going higher, higher, and higher. Higher, 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 and higher. So no, this isn't over, but I think that we've proven our point in regards to would we have taken this trade, why we would have taken this trade, and why we would have made this trade. So see how this came, and it basically bounced off of the trend dot right here, and it's holding. So we'll see that this one, as you see that when it opened up higher. So we'll see what they do here. This is where it becomes a little interesting, of course, because this is where the deception comes in. And what they're trying to do is trick the retail trader to go short. I'm still long because we originally went long. Now, unless this candle comes down and just rips through this level and this one, I'm still long, because I don't see that it's going to come down that aggressively. Now, granted, it did hit a level that, hasn't been hit since 2004. That's a very important, important level. So would the assumption be that from this point, the Canadian is going to get stronger? For Paul's sake, it better. Because that means that he'd be able to afford to buy my software, because it would be cheaper. So if in the next few days the Canadian gets stronger and the dollar gets weaker, then someone's jumping for joy. So now, of course, where this is at, you can see that the buyers have conceded to buy at a lower price. And so now it's going to come back down, but I have no interest any further. Why? Because this is not a trade that normally I would take. This is the granddaddy of them all that I would, and I would throw everything behind it. So that's all she wrote. Could I have gone out with more? Yes. But I wanted to show you the reasoning behind the decision process, the reasoning behind the drive of the trade, and why it made sense from the very beginning when we saw it on a 10-minute and on a 15-minute. Because in Forex, you're going to be looking at the higher time frames with this software. You're going to be looking at a 5-minute. You're going to be looking at a 10-minute. You're going to be looking at a 30-minute, a 20-minute. That's what's going to make sense. And when you see power dots form, you're not going to question it. You're going to throw the kitchen sink at it. With risk, understanding risk, what would be your risk here? Your risk would be, your stop loss would be right under this price level. That's where it would be. So if you entered this trade, you would put a stop loss of no more than 10 pips here. Why? Because you know that they're not going to break through. This is an established support level by them. They change their support levels every day, every week. Not every hour, but they do every day. So what that shows you is that now you know where they can't stop hunt you. Why? Because the banks, you know that the banks are not going to drive the price down there. Now your broker, that's a whole other story. Because if you're on a B book, which FXEM is a B book broker now, what does that mean? Is that they take the opposite side of your trade. Then they could widen the spread, stop hunt you, take you out, and of course they're going to literally piss you off. Why? Because I've had conversations with clients right now that are leaving FXCM because of that. Because they're stop hunting. Because they are implementing a dealing desk to trade against them. And so no one likes to lose. I don't like to lose. I want to understand why I'm going to win, how I'm going to win, and not how I'm going to lose. So revenge is sweet when you can get it. Make no mistake, there's no better revenge than extreme success. And that's what I'm going to show you here. I'm going to show you how to find extreme success trading Forex, trading futures. You can trade binaries for all I care. You know, if you're in Europe and you're trading European binaries, this is the best strategy. You can't lose. Well, you can, you know, if you don't know what you're doing. But I mean, it's just too easy. Come on, man. How much more easier do you want it? So, no, at the end of the day, you know, it comes down to how badly do you want to change? How badly do you want your financial future to be in your hands where you can control it? I can't make that decision for you. You know, there's a saying, you can take the horse to the water, but you can't make him drink it. Well, let me let you in on a little secret. You're not horses. A horse cannot conceptually understand the concept of change because he can't. He's domesticated. You're human beings, you're individuals. You just have to want to change. And if you want to change, I will help you. I will guide you. I will teach you. Let's see. Well, no, they'll manipulate it against you. They'll they'll widen the spread and they'll manipulate it to take you out. Why? Because they're desperate to make money right now. I want you to think about it. Remember, they took a big hit this year at the beginning of the year when the Swiss National Bank, changed its policy with the euro and removed the peg. And so it ripped the market limb from limb, and it ripped FXCM over $250 million in losses. That's not an easy hit to take. You lose $250 million even though you're one of the largest retail Forex dealers out there. You're going to cry. And that's what they're doing. They're crying foul. They're crying, oh no, why me? Well, they've been doing it to the retail trader all this time. And suddenly they got a piece of their own medicine and they're not happy. We live in a capitalistic society. I got no sympathy for corporate America when it loses. Why? Because they don't give two rats about you and me. So now that the oil industry is in debacle, where they're facing their bubble, they face their bubble, and they're actually coming in and losing their head. Do I care about the oil barons in Texas? Not at all. If they get their heads kicked in and lose everything, oh, well, guess what? You're human. Now, will it cause a tremendous amount of unemployment? It will. Will it force people to find different employment? Yes, it will. It's called evolution. Capitalistic evolution, the type that we don't like to listen to, the type that we don't like to live because we become very comfortable with the lifestyles that we lead. I know this. I used to be a broker. I had a great lifestyle as a broker. I was one of the best. And what happened? My company went under. Not because of me, because my CEO was a thief. So, was it my fault? No, it was not. Was it my decision? No, it was not. Did it affect me? Completely. Turned my life inside down, upside down. And so now I teach people how to be in control and not dependent of their jobs. You thought it was the kids? Yeah. Oh, yeah, the kids. Yeah. Yeah. No, haven't spoken to Rick. I will be speaking to Rick at Phillip Capital over the weekend. He was in the hospital, had a minor procedure done, and I forgot about that. That's on me. But I will be speaking to him. But look, remember I told you it was going to go right back up? Look at where this is at. It came down, came right back up. You know, my entry was here at 136.73. It's at 136.93. I could have gotten out with 20 pips. I actually could have gotten out with 35 pips. But oh, I'll find out for you. Actually, I'll speak to her today. I'll try and reach out to her today. So, bottom line, ladies and gentlemen, is we're looking for trading opportunities. Let's take a look at the euro. Everyone likes the euro. The euro is so fun. It's exciting to trade the euro. It's one of those pairs where you're like, come on, give it up. You gotta have fun when you trade. See, would I have taken this trade here on the 10-minute? I would have slapped the kitchen sink on it. I would have borrowed my mother's kitchen sink and slammed it on their heads to go long. Would I have known that they were going to reverse? Yes. This indicator is telling me here, here, and here. And they did. Would I have taken this trade down? Probably. But I like these trades more. These trades make the most sense. And it formed higher than the previous power dot level, meaning don't doubt it. Take the trade. This is the one. This was the gift of gifts this morning. This was the one that would have put a smile on your face this weekend, where now you can go have a nice dinner, a nice lunch, a nice breakfast, see a movie, go play some golf, whatever. Go have an ice cream. Have one on my behalf. I can't have ice creams anymore. So, whatever toots your horn, whatever makes you happy. This was a trade that would have put a smile on your face. Why? Because you would have seen this coming a mile away. 109.47 all the way up to 110.28. That's a significant trade. You're talking 60, 70 pips on that puppy. And you would have had time because they gave you time. When this one formed, it gave you time. And they didn't spike. So they had to they had to rebalance accordingly and take their time. So yes, you had plenty of time to take their money. So that's really all that I have to show you for today. I hope that you have had a fantastic Friday with me. I'm going to put down my email for those of you that are interested in learning more on how to use our software and what you need to do to get our software. Because remember, only you can decide to change. and this is changing for the better. So you have my email, Ricardo at phoenixtradingstrategies.com. My phone number is 818-431-1357. Don't be afraid to call me. I'm here. All I can do is help. I'm not going anywhere. Well, today I am, but I'll be on my phone. So guys, have a great week. Have a great weekend. We'll see you Monday morning. Let's take a look at what the Dow's doing because it ain't pretty. Well, it came down, it bounced right back up, but I'm thinking it's still going to just range and just hold around here. But what a drop. I mean, seriously, look at this thing. This is a 10-minute. It formed here, 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 4 times. This is what we call a home run. When you get something like this and it forms 4 times, you don't question the trade. No way. You load up. You make sure they remember you. So that's pretty much it. Have a great one. Thank you for joining us here at Phoenix Trading Strategies. It's been a pleasure. I look forward to seeing you Monday. I'll send you guys an email. And I did take the trades yesterday for the Bank of England. We're going to be sending out a video regarding that, and we'll be sending out this video as well. I did 12 minutes short on it. Took 4 trades and made over 100 pips on them, but you'll be able to see it. It's very good. I think you'll like it. Have a great one. Take care, and we will see you Monday morning. Bye-bye now.